Iran is not where it was many years ago, where the production was really impacted. A lot of the production has come back online. So if the deal happens, the amount of barrel that will come online will not be a flood of barrels. So that's one thing. But indeed, it's a bearish news. The key thing also, I think, the number of agencies like OPEC, EIA, they also reduced their tariff-driven demand forecast across the region, across the globe. That's also kind of putting a weighing on the oil prices. But the more important point I want to talk about is summer is still not here. I think Trump 2025 is not a normal year. From here to the August, the demand will increase. Refineries will come hungry for crude oil. So I think at this point of time, we are still far away from the peak July, August months, and let's wait for those, then the oil prices will tick up.
So, Mukesh, if the market is mispricing summer demand, then what should prices actually be showing right now?
Well, right now, probably, I guess, prices are being driven by a lot of this bearish news around the tariff. We have also looked at, for example, if the GDP doesn't grow by 2.8 and it only grows by 2.5, then the oil demand growth comes down from 1.1 to 0.6. So I guess market is at the moment still processing and still looking at year-on-year more projections rather than really looking at the summer seasons. And I also believe that these tariffs will have a bit of an opposite effect right now, where a lot of people will rush to capture and hold the demand and fulfill the demand. A bit of an oil anxiety might start to come as we go toward the summer. So there may be some summer demand might come even early. I think those things are not getting priced fully in the market.
Okay, so Mukesh, let's unpack a couple of these key points here. And first, focusing in on the Iran equation here, what's your base case for Iranian crude flows if we saw this potential deal actually coming to fruition between the US and Iran? Will we see oil coming back to the market? And if so, how much?
Well, I think the exact number, Dan, would be difficult to call at this point of time, but I would say in the very short term, depending upon how the oil has been stocked up, 500,000 barrels of oil can come in certain point of time. Yes, that's very much possible. But I think the key question also is that the buyers, which is the China, so it's not just an Iran-US nuclear deal. There has to be a resolution on the China side with the US as well, because US is sanctioning the Chinese refiners who are buying. So it's not just a deal between US and Iran. I think this involves a deal with the US and China, which is a different ballgame.
Indeed, and markets are also looking at the headlines here because it would seem as if the United States and the hawks within the Trump administration, also under pressure from the Israelis, are still holding on to the idea that we could see direct US strikes or perhaps even Israeli strikes on Iranian nuclear infrastructure and oil infrastructure if these talks do not progress in the right direction and a diplomatic agreement cannot be reached here. So I think that's important to point out as well, perhaps something that the market is also not pricing. Mukesh, on another point here, if Iran does eventually come back online, which you would think is the hope among the Iranians here, what will that mean for the OPEC Plus dynamic as well, which of course is also preoccupied with the demand equation right now, having just added fresh supply to the market?
I would say that OPEC Plus will stay opportunistic, like they have given an additional barrels in May, because there is clear indication of the loss of non-OPEC barrels in Canada, Norway, based on some maintenance and turnaround. So if Iranian barrels come part of it, I would say OPEC will again calibrate. The most important metric to watch more than the flat oil price is the time spreads in the backwardation in the market. And we see that those numbers, at least in the prompt months, are still holding and giving an indication of the tightness. I think contango is what OPEC Plus will certainly guard, and so that the contango doesn't come and market stays backwardated. So I would say that OPEC Plus will stay very calibrated, and as the demand, and they have the crude handle and they have the product exports handle, which is a little less understood phenomena in the market.